Welcome back to CannaWeek, brought to you by New Frontier Data, where we deliver the week's top headlines in cannabis and hear experts weigh in on the impact these stories are having on the industry. I'm your host, Heather Beuerlein. Our first guest today has an extensive background in building brands, managing key relationships, and strategic partnerships. He has been at the forefront of Hypur's expansion efforts for over 5 years and touches financial institutions, government officials, regulatory bodies, and state legal cannabis industry. Please welcome Chief Revenue Officer of Hypur, Tyler Beuerlein.
Thanks for having me. I appreciate it.
Absolutely. And our next guest is a regular on CannaWeek. He is a pioneering thought leader in the industry and is well sought out speaker in the industry. He runs our phenomenal research team here at New Frontier Data. Please welcome Chief Knowledge Officer John Kagia.
Thank you. Good to be back.
Well, Tyler, before we dive in, if you don't mind, just giving our listeners a rundown of, your company, who you guys are, what you do in the industry.
Yeah, so Hypur is a regulatory compliance technology company that was built to solve the banking problem with any highly regulated industry. So I think what many people fail to realize is there are industries that are perfectly legal that have had the same, if not greater, challenges than the state legal cannabis industry because they pose a regulatory compliance burden to any bank or credit union that tries to bank them. So our technology was built as almost like a core banking system for highly regulated industries. When we launched, 6.5 years ago, we started getting calls from banks and credit unions wanting to explore banking the cannabis industry. And so fast forward, a very large percentage of the banks and credit unions that bank this industry to scale in the US are our clients. And that's enabled the fintech arm of Hypur to go nationwide that enables permissible digital payments in environments that don't have access to traditional forms of payment. So as you know, you can't accept any branded card in the cannabis industry. We built our product specifically to enable commerce to happen throughout the market. So we're rapidly expanding on that side. That product is called HypurPay. And so we've been on the front lines of this in a very unique way for a long time.
That's awesome. Well, there's definitely a need for it, for sure. Well, we're going to dive right in because we got a lot to cover. MJ Business Daily reported how to steer your cannabis business through an economic downturn. So according to the National Bureau of Economic Research, the U.S. entered a recession in February. So many industries are struggling to adapt to the economic downturn. Cannabis has been an outlier as being deemed as an essential business and has been a really much needed source of tax revenue. So Tyler, I would love to start with you. How would you describe the impact of a recession on the cannabis industry?
I think what we've seen over the years is cannabis is kind of insulated from market conditions. And I think COVID is a perfect example. They deemed these businesses essential. Yes, they had to pivot. In some states, they had to close down the retail locations, but they were allowed to deliver, do things like pre-order. And candidly for us, it was a bittersweet windfall because everybody had to move to a digital cashless environment. And so that's where we thrive. But yeah, I think the capital markets are seeing it right now too. If you look at the cannabis stocks and the earnings that are coming out, they're extremely strong and the fundamentals are there. And so I think people are starting to realize that regardless of what happens in the market, cannabis is here to stay.
John, what's your take on that?
So, I think the two things that are happening in parallel, COVID and then the economic turbulence caused by COVID. So just first on the COVID side, cannabis, I think, has proved not just to be COVID proof, but that COVID has created a really unique circumstance that allows the legal industry to really thrive. We're just looking at some retail numbers, and between April, May, June, and July, we saw the highest consumer spending per transaction that we've seen in cannabis since many of these markets launched. In July alone, or in the second quarter alone of 2020, spending on average per transaction was 20 to 25% higher than it was in the first quarter. So consumers have definitely been buying a lot more cannabis since the pandemic began. The shelter in place, I think, has given consumers a lot more time to consume cannabis. And interestingly, I actually think that the pandemic has also made consumers a little more wary of purchasing from the illicit market. So people who live in legal markets but were splitting their purchases or buying exclusively from the unregulated side of the market have actually now started buying from the dispensaries, not just because of their concerns about COVID, but to Tyler's point, because many of these states have made it easier to purchase from these markets through delivery service, on-demand, online ordering, through the cashless transactions, etc. So the industry's been doing really well in COVID. And then second, on the recession side, we have seen historically that cannabis does tend to be recession-proof. Consumers who are regular consumers who have integrated deeply into their lives are going to be very reluctant to cut it. They may look for lower priced options if their financial situation gets tightened, but they're not going to cut their demand. So one of the things that we're seeing in the market is a lot of the brands are now offering lower priced options to serve customers who may be going through some kind of financial hardship. But we actually expect that demand will remain fairly resilient even as we see the economic fallout from this pandemic over the coming months.
Yeah, and I'd like to expand on something John said too, if I could. We've seen a shift to a more mainstream experience for a consumer, right? And I think retailers that are sophisticated understand that your retail consumer is a retail consumer, and that consumer is very important. But the true home for this product long term is your mainstream consumer as things become infused into edibles and things of that nature. But they expect an experience that's similar to like what Amazon gives them, right? And so I think it's sped up that learning curve for the industry. And I think at the end of the day, it's a healthy thing.
Agreed.
Yeah, it sounds like cannabis with the higher purchase prices. It's like the liquor store and wine store. You know, like my friends and I were all talking about, you go every 3 days to stock up for 2 weeks. So it seems like everybody's purchases are getting a little heavier right now before we see any really tightening of the belts. Well, Tyler, as far as suggestions on effective approaches for like the plant touching businesses to help navigate the banking restrictions to minimize cost, what do you think are the best ways for these kind of businesses to navigate this?
Ultimate transparency. I tell people all the time that are in this space, you're in the compliance business, right? I mean, that's how you have to view this. And regardless of what's published in the media, there are really, I would say, less than 50 banks and credit unions that bank this industry to scale. Every state's different. So one state may have one option, one state may have 7, right? And so you have to get to people that understand the dynamic, that can put you directly in contact with a bank or credit union. And when you start that relationship and ongoing, transparency is a must. You know, you want to be forthcoming about everything. If you do something to jeopardize a bank's regulatory compliance program, you're jeopardizing the entire program, right? It's not just you. And so the other thing is, you know, something we've done as a service to the industry, we'll always pair operators with the appropriate bank or credit union free. It's something I've done for over 6 years now. So if anybody needs help, they can get a hold of me. Happy to make an introduction directly for them to mitigate dealing with any third party that's going to put them in a bad spot.
Nice. Well, it's kind of piggybacking off that. Like, what kind of role do you think alternative banking and payment sources play in just stabilizing the market?
Well, it's a tricky conversation, right? And I let's address alternative banking first. It's not really alternative banking. It's just banking for another high risk industry, right? And now there are some components of this with the federal illegality that are challenging. But on the payment side, candidly, we've seen every bad actor come out of the woodworks. We call it whack-a-mole in the building. They convince operators that they can run a reverse ATM or they can run a credit card product. They can't. And so what happens is, not only do the merchants get jaded by this as they get shut down, the consumers get jaded by it. You have, the DOJ issue in California with the large delivery provider out there, and there's massive risk. And so we try and always caution people, you've got to understand payments well enough to know what is truly permissible and what's going to put you in a world of hurt. And candidly, one of my biggest concerns is we're seeing technology providers in the space that have gone out to try and raise money for their businesses. And the way they've done it is they said, well, we've struck an agreement with a cashless ATM company, and we're going to receive transactional revenue, and that's going to add to our revenue model, and we're going to raise money at that valuation. The problem is Those things are not sustainable. They will get shut down. And so again, you're putting the merchant at risk, you're putting the consumer at risk, you're putting your investor base at risk, and it never ends well.
Tyler, I think you made a really important point that's worth just pulling the thread on a bit, which is this idea that we see from FinCEN that there are hundreds of banks that claim to be banking cannabis businesses. But as you say, the actual number that are doing this and doing this at scale, doing this, meeting all of the DOJ's and Treasury's requirements is much smaller. Talk about that distinction. Sure. And what it means when you talk about the small number of banks that are actually banking this industry at scale.
Sure. So the FinCEN reporting is based on what they call SAR filings, and that stands for Suspicious Activity Report. And those are required per FinCEN's 2014 guidance to banks and credit unions. That's the only guidance that's out there today from the federal government to banks and credit unions, right? So what happens is if a bank or credit union files a SAR, they may file a termination SAR. So they may find a cannabis account, they may terminate it right after, but they have to legally file those documents. FinCEN puts that into a report, and that's how you get that 700 plus number, right? But because we've been on the front lines of this for so long, we know who's banked where, we know who's doing what in what state, and unequivocally, the ones that have built out the regulatory compliance programs to do this, to scale, and that are banking, let's say, more than 15 or 20 operators, some are banking over 1,000, that number is less than 50 in the US.
So the financial institutions filing the SARs just happen to have found a cannabis business in their records. And because of the requirement, they file this report and they get counted in this constellation that appears to be banking the industry, but the people who are actually doing it with intentionality is much smaller. Or
they may have a very large client that's been with them for 20 plus years. They may be a small bank and they may open one account for it, right? So they're not banking the industry openly. Right? They're just doing it in a one-off. So again, it goes back to scale. It goes back to who has built out the regulatory compliance program to truly do it.
Nice. Well, moving on, we're going to go over to thehill.com. Recently reported that Nancy Pelosi defends cannabis coronavirus response, claiming, quote unquote, this is a therapy. So Congress, as we know, has been slowly trying to work towards a new relief package for COVID-19. And it appears that they're trying to put a provision in there that will allow legal cannabis companies to access traditional banking methods. And if this passes, it could be a huge turning point for the industry in itself. Tyler, if the industry were to be granted full access to the banking sector and financial markets, what impact would this have on the industry, in your opinion?
Yeah, great question, and it's something that's grossly misrepresented in the market. And let's talk about the SAFE Act for a second, because that seems to be a big point of topic. People think that if the SAFE Act passes, all of a sudden, Chase and Wells Fargo come running to the table. And what they don't understand, again, going back to other highly regulated industries, and cannabis will always be a highly regulated industry, there are very few institutions that will bank perfectly legal, highly regulated industries. And some of those industries dwarf cannabis from a volume perspective as they currently stand. So the reason for that is because if I'm a bank or credit union, the only conversation that matters is the conversation between me and my regulatory body, right? So if I'm banking a high-risk industry and I haven't taken the steps to bank it correctly, which means a huge BSA program, AML controls, technology providers, all of those things, if they don't have those tools, they're not going to touch the industry, right? And so that's kind of misnomer one, I think, with the SAFE Act. And so you're going to see those same 50. I mean, there will be more, but those same 50 are still probably going to dominate. On the transaction side, I've seen merchants come out with communication to their member base saying, hey, reach out to your congressperson and support the SAFE Act because we want to use credit cards. Well, the SAFE Act does not change the federal legal status of the product. The brand card networks will not enter the market until federal legality, period. So it has no impact on them either. The aspects that will impact, lending should open up fairly aggressively. And also, they give the FFIEC 180 days to come out with additional guidance for banks and credit unions for their auditors. So the FFIEC gives guidance to bank and credit union auditors on how to examine an institution, banking and industry. There's currently no FFIEC guidance for examiners, so they've had to learn like everybody else. And that's been one of the issues. So there are some big positives, but it by no means opens the floodgates for the industry.
Right. John, what's your thought on that?
Yeah, I agree with Tyler's assessment. The both because of the latent stigma that has always been associated with cannabis, and I think in some of the more conservative financial networks that or financial circles that remains. But also, it's, as long as it remains a Schedule One substance, many of the things that have throttled the ability for cannabis to become fully mainstream remain unchanged. Now, I do think it is very significant that that conversation is happening now amidst one of the most consequential moments of federal government stimulus spending debate that we've had, certainly in our lifetimes. So, this is, I think, a reflection of the seriousness with which our political stakeholders are starting to view cannabis's position in the states where it is an active legal market. But I think it also just underscores, and I think that is notable partly because the timing of it happening just before the election, and an election which is also going to be consequential for the industry, with some important markets, whether it's New York, New Jersey, the South Dakota, and the two measures there for both med and rec. And then the potential shift in congressional makeup with quite a lot of congressional candidates for both House and Senate being forceful supporters, means that if this debate is happening now in August going into September, it means that cannabis as a political issue is a little more top of mind going into November's election. But ultimately, this does set the stage for a real debate that the country is going to need to have that's long overdue around the scheduling of cannabis for all of these reasons. And until that happens, this is a good, important step in the right direction in terms of both financial market access for the industry, particularly to lending, as well as to kind of the normalization in public attitudes toward this issue. But it is not a panacea. This is not a panacea to actual formal federal reform hinged on the reclassification of cannabis as a Schedule One substance.
Right. Well, hopefully, just with the cannabis industry proving to be so resilient during COVID and the massive tax generation that's been happening for states like Illinois, hopefully that will push the federal conversation of becoming federally legal will be getting closer and closer. Tyler, what do you think the value proposition of choosing alternative banking over the large traditional institutions will be for cannabis companies?
Again, I don't think it's necessarily alternative banking. I would just say that if I'm a cannabis operator, I want to make sure that I'm banking with a financial institution that, again, has built a program to do it right. Because I know that I'm not going to get a phone call in 60 days saying, hey, sorry, we had to close your account. You're going to get a cashier check in the mail, right? That doesn't do me any good. And I know that some of those relationships are not the cheapest because those institutions are taking on a lot of burden and risk, and there's a cost to that. But I tell people all the time, what's the cost of you not having banking? And whether they realize it or not, that's going to be far greater than what they're paying an institution on a monthly basis to have that transparent relationship.
Then maybe a variant of that question then, Tyler, is I'm assuming that we're going to be seeing, or expect that we'll be seeing in these new states coming up, entrepreneurs, businesses looking to set up shop and will want these financial services. What sort of questions should they be asking to make sure that they are partnering with or working with a financial institution that's prepared to do this right?
Yeah, so what we've seen, and it's really been with every new market that's launched, and I'll take Missouri and Utah as two examples. Before those markets launched, literally 6 to 9 months before, there were institutions that had already begun setting up their programs to permissively bank the industry. And so there's a lead time to that. And so we typically hear, or the market hears, who's doing this, because typically they're working with the state government, or they're trying to meet with government officials to understand the program, the regulatory framework, so they can do what they're doing correctly. And so we usually hear about those things well in advance. And I would just say again, we're happy to do it. If somebody needs help, call. I'm happy to make an email introduction directly to them, and we ask for nothing. It's just something we believe in doing. So,
what do you think, or what do you hope for as for the future for cannabis and banking? What do you think that will look like?
I think eventually this will go federally legal. And when it does, this will open up significantly. I think the largest pain point for the industry right now is not banking. Every major operator in this country has transparent banking relationships everywhere. And I know where they're banked. So the notion that the banking issue is a massive crisis is really misguided at this point. I think the biggest pain point is lending. And so I'm excited for the industry to, you got to remember some of these multi-state operators have had to go out, and as they acquire licenses, they have to pay cash for every property. They can't take a loan out. And so is the markets have compressed and there's been a liquidity crisis, these guys have had to pay exorbitant interest rate amounts to try and get access to capital. And that's really hurt the industry. So I think that's going to have a big impact. I think 280E going away is obviously going to have a massive impact on the industry in a positive way. I think access to the branded card rails is really going to help the industry, and that will eventually come. But again, I caution everybody, don't take a short-sighted approach now that's going to hurt you 3 years down the road when these things finally get here. And unfortunately, too many people take that short-sighted approach and it burns them. So yeah, I'm excited for what's to come, but it's really going to take federal legality for things to really change.
John, what are your thoughts on that? Would you agree with Tyler?
I agree completely. And I have been struck by some of the liquidity and capital crunch crises that we've been hearing from firms over the past couple of months. When you're relying purely on private capital amidst a recession, amidst the level of uncertainty that we're facing, there's a lot of really strong performing businesses, a lot of really well-managed, effectively managed businesses that are really struggling to raise the capital that they need to get through the season. And the longer this recession goes on, having or being unable to secure some of these conventional funding sources, I think will actually end up being a disruptive factor in this market and an issue that could potentially hamstring the market's future growth, if only because it dramatically raises the cost of capital, because the people who have money are able to charge dramatically high interest rates. But I think Tyler's second point is even more critical. This idea of, if there has historically been a lot of gray spaces in which operators have been able to bend rules to get away with, to kind of propel the businesses forward, we're increasingly entering a season where it's almost imperative to be beyond compliant. Doing everything right now will make it dramatically easier to take advantage of the expanding financial market access when we get there. Because one of the things that's going to happen is that you will go through a pretty intensive diligence process when the real stakeholders or when the real financial economy starts coming through. And they're going to go through your closets and find all the skeletons that are buried there. And just as we've seen historically, a lot of deals fall apart because as people started opening the kimonos, as people started opening the closets, investors or the financial partners started finding things that they found troubling. We're going to go through another cycle of that. And so getting your house in order now, even if it means at slightly higher costs, doing everything that you need to do to toe the legal line now will only serve one well as the markets open up and make it much easier to slipstream into the conventional financial markets.
Right. Well, we are almost out of time. So any final thoughts for our listeners before we go?
Just, if you need help, call. We've been at this a long time. We've seen this through a unique lens. And if we can help you avoid landmines, and they're everywhere in this industry, we're happy to do it.
Yeah, I'd actually just echo that. We followed the work that Tyler has done over the past 6.5 years, and there are really very few people in the global economy that understand the financial markets or the financial issues associated with the cannabis industry as well as Tyler and his team. So, phenomenal wealth of knowledge, arguably the biggest Rolodex in the space when it comes to financial services. So, definitely a resource worth tapping. And then two, for all of the agitation that this discussion around some of the easing of the restrictions being proposed as part of the COVID stimulus, it's an important moment because it's an important milestone for the industry. But neither the industry nor the public writ large should assume that this means this will be the end of the story in terms of the challenges that the industry faces. And it should not mean easing up the pressure that advocates are placing on lawmakers at the state and at the national level to advance true cannabis reform, and that can only happen with rescheduling. So until that happens, many of the issues that we've discussed here are not going to be addressed.
Great. Well, thank you both so much for your time today. And please be sure to like and subscribe to the podcast. You can find the news stories we covered and more on New Frontier Data's Cannabis Insights Daily. I'm your host, Heather Wickline, and we will see you next time. New Frontier Data provides this podcast for entertainment purposes only. Nothing stated in this podcast should be taken as legal or financial advice. Reference to any specific product or entity does not constitute an endorsement or recommendation by the company. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. Views and opinions expressed by New Frontier Data employees are those of the employees and do not necessarily reflect the view of the company or any of its officials. If you have any questions about this disclaimer, please contact our legal department.